Yo, 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 what's going on, my friends, my people? How's everybody doing? Man, wild days in the stock market. I don't even know what to tell you, except, the market has been heavy for really months, and now the last couple days, we're really hitting some red. You can see the headlines have just been crazy the last couple days. The Dow's dropped more than 800 points in 2 days. It started yesterday. There was a report about manufacturing that came out. It came slower than expected. That started like a little bit of the kind of rainfall. The market had been heavy for a while. And then, you've got like this impeachment stuff, which I really don't think that matters that much. But you starting to see like kind of all these headlines. Then you're on your Twitter, probably working. You're seeing the Trumpster tweeting this and that. Guys, there's no collusion. Okay, there's no collusion right now. Mr. Senator Peter Schiff, or whatever his name is, he's got to go to jail. Okay, it's illegal. He read a transcript, but he messed up my name. And I'm here talking to the president of Finland. Okay, he's a fantastic person. And I'm not even joking. I just put my hand on his leg, and then he brushed it back. It's fantastic, but don't ask me any questions about the collusion because there's no collusion, okay? So you're starting to see like kind of all the stuff that's been happening, and the headlines like during these times just get nasty, right? When the market is having trouble kind of breaking out, and then you start getting like the shift in headlines and news kind of turn, then all just kind of piles on each other, and it kind of creates a like kind of spiraling effect. And that's where you're getting down to it. And you've been hearing like the rumors or messages for a while, like, hey, maybe a recession is coming, but they've been saying that for a long time, and who knows when they come. This is one of the reasons I love trading technicals, is that even though we hear the news, we still have price action and price data to guide us. But it's been nasty the last couple days. You're starting to see anywhere you see the headlines. Like it could be one trade war, recent wave of selling has ended relatively calm stretch. This is the trade war stuff. This lady's saying it's because of the impeachment stuff. I mean, the Trump's has been under, some kind of investigation since he came into office. Who knows? Like, is the impeachment really going to drop the market 1,000 points? Who knows, right? So it just ends up being kind of like this perfect storm of kind of fear mongering kind of stuff. And we've seen it, in the past quite a bit. Let's take a look at just some charts and kind of try to get a view of what's really happening. In October, we had very, very similar news, right? It's like Nealer this and China this, and the market ended up pulling back really, really sharp. And then all of a sudden, right, they started saying trade war is better. They start cutting interest rates, and we're kind of right back to highs. That's just the way the market works. One thing to remember is like when the market's really dumping, they don't last very long. The last few years, they tend to last for like a month or two, and then, right, 1 month, and then, you're kind of back. But no matter what the news says, we have to let price and our charts guide us. What I can show you right now is that the market itself is just in a big giant range. And, 195 on the QQQs is the top of the range. 180 is kind of the bottom of the range the last few months, at least since summer, right? Anytime we've been on the bottom of the range, the news has been really bad. We've been thinking like, holy crap, this is bad. This is happening. The end of the world is near. And then, things start to look better, and we kind of grind our way higher. And now, right, that cycle is changing again. But in the end, we are just in a range, right? We're just in a range, and that's how ranges work. At the bottom of the range, market always looks nasty. At the top of the range, the market always looks great, and then they just dump. That's how range trading is. So we're so used to trends, right? Like we've had so many trends the last few years, in the last decade. And when you're riding in a trend and you're like just kind of going up your moving averages and all of this stuff, everything is hunky-dory. Every single stock is breaking out. Every single pullback is working. Everything just works clean in terms of your technicals. But even if you're a fundamental trader, everything works because every stock just goes up, right? So no matter what strategy you're really using, pretty much all of it is working because it's a rising tide lifts all boats. What happens when the market gets in a range is that it becomes a stock picker's market. We are in a period of distribution. What I mean by distribution is when the volume pattern changes, where, right, the sellers, on your down days, there's more selling than on your up days. And we've been having a period of distribution for a while. But when you're in a period of distribution, oftentimes, even when you're like at highs, and the indexes look great, it can mask what's happening underneath the hood of the market. If you look in the QQQs, if you look at like momentum stocks for the last, so many months, right? Like Netflix has been cut 30–40%, Roku, right? Big drops in some of these names. So you're starting to see, right, some chinks in the armor, even though we're really not that far from highs. And that's how range markets and distribution markets work. Underneath the hood of the market, there'll be a deterioration in a lot of momentum and a lot of growth names, and that'll kind of mask what's happening in the indexes. But a lot of these names are already down like 30, 40, 50%. So, if we start to really kind of flush out, we're probably, much closer to, bounce than like, hey, the world is ending type of scenario. Now, I can't predict it when the world is ending type of stock scenario. We can always look for evidence and reasons to be scared, right? Because we just turn on the news and it's like vaping, impeachment, right? Like child kidnapping and guns and shooting and whatever, right? Dog abuse and cats going missing. And before you know, right, it's just a never-ending thing. But what we need to really focus in on, what I want you guys to focus in on, right, and is be smart, is think about where the ranges are, right? So we're in a bigger term range. It's when the range starts to break down, that's when I would start to get worried. If this range breaks down, then okay, we have support here at 170. So if this range breaks down, then we may start a new range, right? And then we'd have to trade around in this range. If this range breaks down, then we got a lot more room to fall. And then, you know what? Things are going to get a little bit hairy. But even then, it is natural for markets to have a couple sharp pullbacks throughout the year, right? If you look at 2018, even though the market was like really strong for most of the year, we had some really sharp pullbacks, right? We had some really sharp pullbacks. It doesn't mean the end of the world. It just means that, look, we've had a nice run this year, but sometimes you're due for a little bit of sharp pullbacks. My mentor Paul always told me the market gives you two hot buying opportunities every year, where it gets so nasty, everybody wants to just jump out the window, and that's where you come in. And when the breath starts to really turn, that's when you want to kind of start leaning back into this thing. So, one thing I like to track beyond just the ranges, I like to track market breadth. And one thing you'll notice is, every blue moon you'll get, when this T2108 indicator on TC2000 gets like under 10, close to 10 or under 10, that usually ends up being like a really, really extreme level of selling in the markets, which tends to be a good buying opportunity. So if we start to get really, really nasty, beyond just looking at my charts, I'll look at this and some other things to see, hey, is this the time to go in and kind of wade into the weeds and make some longer term plays? In the meantime, ignore the noise. Yes, we are getting headlines. Sure, it's nice to read them, but remember, we are in a range and you want to really play the numbers while also being cognizant of what's going on in the world, right? We don't want to just be, right, ignorant about things, but price is the only thing that pays, and trade the range for now. And of course, like for me personally, I don't do any swing trades when the market's like this, but I'm doing tons of day trades. When the market gets volatile, right, you can still make good chunks as a day trader. Our swing trading service that Paul's doing, he's got a couple shorts going right now. We were short some Starbucks. He just covered this up today. Yesterday we longed some SQQ, which is doing pretty well. I think we're going to have ourselves, if we dump a little bit of the market, we'll have ourselves some nice plays on the swing trading side, but also the day trading side. Guys, we got a pretty sick chat room. You guys are more than welcome to join us. We have free chat days pretty much all the time. And of course, I'm on YouTube Live in the morning talking about what we do. So, I'd love for you guys to join us 9:15 Tuesdays and Thursdays. Guys, if you like this video, give me a little thumbs up, do a little subscribing, share it with your grandma, do whatever you got to do. I love you guys. I appreciate, of course, you guys watching me. Peace in the Middle East. Guys, protect your capital. It means everything. Take care.